Hello, hello.
Hello, everyone.
Hi, we are live right now. Hi, Fiona. Hi, Jeff.
Hi,
Hi.
hello, Jeff. Hello, Harry.
Right. So, hi, everyone. So, it's another great Saturday afternoon. And wow, we have like 50 over people coming online. So, once again, I'd like to welcome those able to take some of their precious time to join us today on our this Jalin Realty webinar. All right, let's give please bear with us. Let's give a couple more minutes so that we can have more people to join us. Okay, and for those who hope they find themselves at the right place, today we are fortunate to have our in-house mortgage broker, Miss Fiona, to actually talk to us more about financing. But before her segment, myself and Jeff will introduce who we are, and I'll also be talking a little bit on the local financing, local banks financing. This will actually tie up with what we actually our content for today. We want to give as many options to purchasers, to investors. All right, and our next slide is actually I want to recap actually. I understand there are some new friends with us today as well. So besides introducing Jalin Realty, we actually done a lot of webinars, a lot of events previously. Of course, that is pre-COVID pandemic period. But with this technology, we've been using a lot of online events. We have actually done topics on tax, on stamp duties. If you have missed them, do not worry. Do feel free to contact us. We can send you the replay link. You can watch it at your leisure time. And to show what is upcoming in the pipeline, we'll also be planning for, the next topic in the next month for the Australia property market. And eventually we'll introduce our Jalin Property Management service as well as Jalin Resale Australia as well. All right, so we have more people coming in right now. That's very nice to see. And if you're with us, please say hi. You can actually type, hello in the chat group. You can feel free to ask questions and we can take them during our Q&A sessions. All right, so again, I'd like to introduce, my name is Henry. I'm from Jalin Realty Singapore. And I'd like to introduce Jeff, who's based in Malaysia.
Hi, everyone. Yeah, I'm Jeff. I'm based in Jalin Realty KL. So, yeah.
And then we have Miss Fiona that is based in Australia.
Hi, hello, everyone. Good afternoon.
All right. So the next slide, actually, we also would like to encourage you to follow us. All right, via Facebook, via Instagram, YouTube, latest updates for events, for projects. All right. So you can take some time to scan the QR code. Hi, Mr. Raymond. He's saying hi to us. All right, so a very quick disclaimer before we start very soon. All right, people are still coming in. As today is, we're going to talk about financing. So I think one of the main disclaimer that we want to say is we're going to show some numbers, show some calculations, but this is just an illustration. So as we understand, financing is really on a more individual basis. So I think Fiona is going to totally agree with me that it's really subject to case basis, where we will encourage individuals to really speak to the respective representative, like in terms of tax, you can speak to tax agents. In terms of legal, you can talk to the lawyers. For financing, definitely, we welcome you to speak to Fiona so that she can do a better assessment of your financial situation.
Yeah.
All right, so without further ado, maybe we would like to start, and I would like to hand the time to Jeff.
Okay, yeah, sure. So I think we will start off with one of our company videos. So it will show you our company milestones so far. So let's enjoy our short video.
总部位于澳大利亚墨尔本的嘉林国际是一家专注于房地产服务的专业机构。创立至今的30多年来， 嘉宁国际以德为本，以诚立身，辛勤耕耘，积累了丰富的房产物业投资经验，足迹遍布了澳大利亚、中国、新加坡、马来西亚、印尼、文莱和香港等国家和地区。30多年来，嘉宁始终坚持着公司的愿景与理念，以职业道德为价值观，帮助每一位客户成功置业澳洲。
嘉宁国际地产公司能从马来西亚、印度尼西亚、新加坡、澳大利亚和中国持续成长30多年，是全靠嘉宁长期坚持公司的理念和愿景而来。嘉宁是个专业的服务公司，我们的平台是通过房地产这个渠道，制造许多实际与可靠的机会与大家分享，让大家生活变得更美好。
Our core values are derived from the word ethics, and we break it into excellence in performance, teamwork among our employees, honesty in our business dealings, integrity and innovation in our actions, commitment towards our work, and sincere relationship.
与澳洲数百家开发商均有着长期而稳定的友好合作，其代理的众多地产项目遍布悉尼、墨尔本、布里斯班、黄金海岸、珀斯等首府城市。优越的地段、舒适便捷的生活环境、具有竞争力的价格，每一个项目都经过筛选。成熟的团队和后期服务部门，也为嘉宁的客户提供了舒心的投资体验。客户的认可是对嘉宁最大的鼓励。每一位嘉宁人将始终坚持嘉宁的愿景与理念，不断提高自身专业水平和服务，助您更加安心的置业澳洲。嘉宁国际，圆您澳洲梦。
We are Jalin Melbourne. We are Jalin Shanghai.
We are Jalin Beijing.
We are Jalin Singapore. We are Jalin Jakarta.
We are Jalin Malaysia.
Okay, yeah. So start off with, I would like to introduce a bit of our history to our client today. So some of our clients actually our long-term supporter. Then I believe some are quite new to us also. So I will be starting off introducing our Jalin Realty services. So we started off as a marketing and sales company specializing in off-the-plan project. So throughout about 10 plus years, this time we have offices in Australia, Malaysia, Singapore, Indonesia, and China, and also recently we have Hong Kong office as well. So we provide a range of property service, including property management, as well as ongoing property investment support and advice. And I will show you these are our end-to-end solution service we are talking about. So for marketing, sales and marketing, so we will support you around the purchase period until settlement. So during settlement, we will support as financing, which will be today's topic we will be talking about. And then after that, we will have a property management team in Melbourne to take care of our client portfolio on rental, leasing, and also at the end, also we will have a resales team in Melbourne also handling resales property. So this is our whole cycle of end-to-end solution provided by Jalin Realty. So, okay, next. Okay, so here we'll start off with today's topics with Henry. Henry will introducing with finance here.
All right, thank you, Jeff.
Yeah.
All right, so we actually understand that today we have actually friends from both Singapore and Malaysia, and probably even from other parts of the world, like Australia or other parts of the world. But collectively, we want to put this, the next couple of slides, talking a little bit on what is the local scene, the local financing. So in Singapore and similar to Malaysia, we have these local banks that actually does offer loans to the local residents to purchase overseas properties, especially Australia properties. All right, so to speak more on the Singapore side, we have the UOB, the OCBC, the CMB, Maybank, and also do understand that there are also other banks in locally, HSBC and DBS. Some of the banks actually have their own set of eligibility or own set of criteria. Probably, like for example, one example is like to be their premier customers before you can even take the loans from them. All right. In my next slide, I'm just going to talk very general. We actually work with these local bankers for the past many years. We have actually understood some of the bank's requirements, their considerations. So standing in the point of purchaser, you need to understand that what are you buying, where is your property. So in terms of like property states, especially one of the most livable, top livable city, Melbourne, followed by Perth or New South Wales, all these local banks actually do offer loans to you to buy a property in those states. But when we come to other states like Hobart, Tasmania, or even ACT, some banks may not offer banks for them. So as investors, you have to check with the lenders, with the banks, whether they offer loans to these properties. So under the same segment, under pertaining to property, I also list out some banks also do consider the distance, the locations. All right, in certain suburbs, in certain distance to the city center, they will consider those projects as well. All right, and my understanding is the local banks generally they don't offer loans for house and land packages. All right, because house and land packages, their buying process is a little bit different from apartment units. As for those experienced investors, we all know that apartment units usually we buy off the plan, and then again some banks do offer approval right from the time of purchase. I think Jeff, Malaysia side also some banks offer that as well, isn't it?
Yeah, actually Malaysian bank you can start to apply after you purchase the property. You don't have to wait until the settlement time. Yeah. With all the Malaysian bank.
Yeah. And other parts will be higher. Other banks will be waiting for nearer to completion. That means prior to settlement, 3 to 6 months. Then we will advise the purchasers to look into kickstart their loan process. So for now, I need to mute you. All right, thank you. All right, and then moving on, the next point to take note is, of course, the area size. All right, we do come across customers that actually try to take loans when they already bought a Mickey Mouse shoebox size, like usually a studio unit. And I tell you, those shoebox unit only generally comes with like 35 square meters. You can't get loans on them, all right, because of size. And why? Because the banks are considering that those are too small, so I guess those investors have to pay full cash. But for other one bedroom, big units, you can get loans. But also take note that some banks they only consider internal area, but some banks are good enough to consider both internal, external, your balcony areas, your car spaces, your storage cases, as long as they are more than a certain limit, like more than 46 square meters or 50 square meters. In Singapore, what I learned from the banker is they look at 500 square feet. So that's where converted into 46 square meters. Now, very quickly to the loan package, in local banks, we do understand that banks also look at the minimum loan size. Like I come across banks with minimum loan size of 200, or even $300,000. So that also ties back to the purchase price that the investors is looking at, all right, or how much cash they have, and then how much loan, the loan size. But other consideration will be what commonly we call the LTV, the loan to valuation, all right. And currently, good news is the banks, the local banks, they already open up to offer Australian denomination. Why I say that? Because in my 7 years with Jalin, I've seen half the property cycle. Previously, banks only offer the local denomination. That means Singapore only SGD. In Malaysia, only Malaysian ringgit. And then we always, advise clients that got to be careful on the currency exchange. But right, seems like the banks are opening up the doors. They can offer both SGD as well as AUD denomination All right, and then also local banks, they definitely have their lock-in periods. It can be range from 1 year, 2 years. All right, and one thing to take note is both Malaysia and Singapore, the banks only offer principal plus interest repayment. All right, this is something interesting which later on Fiona will talk a little bit a different repayment scheme in Australia. All right, and then to end it off, of course, we also do consider that each of the country, we are all subject to the government regulations. Like in Singapore, we have what we call the TDSR. The full name is called the Total Debt Servicing Ratio. Of course, it includes all your credit card payments, your auto loan, your car, or maybe even other properties that you have take up loans in locally in Singapore. All this will actually affect your loan application or the loan outcome. How much can you borrow to finance or to buy your next property? So ultimately, the last two will be your age and of course looking at your minimum income. All right. So next slide is actually to give an idea that locally for the SIBOR, the Singapore Interbank Offer Rate, right? We have seen over the past 10, 20 years, the rate actually is all-time low. All right, it's very, very low. It's really encouraging a lot of borrowing. Of course, like I mentioned earlier on, locally, the government wants investors purchases to really take note of their total debt, what you call it, the master servicing ratio. All right. And
for Malaysia, I think it's at the lowest now at 1.7 OPR. Okay.
All right, so just to add in one more slide, that is actually to link up to the next segment of the Australian lenders. So even in Australia, the cash rate over the, especially last year, there has been numerous cuts, down to the lowest of, if I'm not wrong, it's like 0.25%. If it's not 0.5%, yeah. All right, so very quickly, after speaking on local banks, which is one of the options that investors can take up to buy the Australian property, I'd like to welcome back Fiona.
Okay, thank you, Harry. Thank you, everyone, to attending our webinar. My name is Fiona. I'm now based in Melbourne. So welcome, everyone. Actually, we have very close relationship with number of lenders. Let me just move on the slides. Yeah, we have very good relationship with a number of lenders. So today in my presentation, basically I will focus on two parts. The first part, I will give you some background about what's the current Australian lending market, and also I will give very brief introduction about what's the those low term and the low features for the current available loan proposals. And part two, and I would like to share some ideas and some experience about how you apply for the loan very successfully. And I would like to also give some ideas about what types of loans suits you. So let's move on. So these slides you can see before 2016, most of Australian lenders welcome overseas buyer. Well, they very keen on to lend money to foreigners. However, things turned around since 2016, later 2016. So since then, Australian banks closed the door to foreign investors. So they stopped lending to overseas buyers. So after that, a lot of non-banking lenders came to the market, and they played the major role into the foreign lendings. However, if saying that, so because it's just started to turn around, so at that time, interest rate was very high, and even high up to 12%. And apart from the high interest rate, and also with very high borrowing costs. So that happened starting from 2016 till 2017. And then after 2000, I think it's starting from beginning of the 2018. So things getting a little bit better. So those non-banking lenders getting more matured, and they don't dominate on the whole lending market for foreign property buyers. So because of the market competition, so those lenders start reduce the interest rate, and also they also start reduce the costs, borrowing costs. So during that time, the interest rate progressively dropped around to 7%. So I believe most of people think 7% is still very looking high. So, but however, the abuse is still continually happening. So now, if we're looking at the current lending for foreign buyers, so the interest rate has been significantly reduced. We're probably looking at the rate is around 4.5% at this moment, but this rate is for overseas buyers, and also much lower associated cost for borrowing. If mentioned about the borrowing cost, 2 or 3 years ago, that was could be reached to 4 to 5% of the borrowing amount. So that's a very high cost. But now we're only probably looking at around, I should say around 0.5 to 1.5% of borrowing amount. So you can see that's a big difference. So through the last 5 years, the lending market, especially for foreigners, has been changed quite a lot. So this is a background, say where we were and where we are. And so now I would like to give you some brief idea about what's the general terms of the current used loan proposals. First of all, I should say those non-banking lenders are very popular, are very reputable, and they act just like a bank, you know. So they are big lending institutions, have very matured and organized process, and also very reliable. So, and providing these loan proposals, they have very flexible terms. So now I'm just to give you some ideas about what terms they are providing at this moment. First of all, I would like to mention about who are able to apply for the loans. So the loan applicants. So the applicants can be payee employee. So for example, you are working in a company, you've got a regular income. So you're definitely eligible to apply the loan with those Australian lenders. And also you can be a self-employed. Of course, self-employed means maybe you own a business, and even you are not a tax-registered company. For example, you are a solo trader, you still can apply for loans with Australian lenders. And someone said, so, oh, I'm part of employee and a part of self-employed. Can I? Of course you can. So this combination, you are also can apply for loans with Australian lenders. And the third category for applicants is those people who already obtained Australian temporary resident visa or permanent resident visa or Australian citizens. So why I mention about this category, because I can see quite a percentage of people who buying properties, they already got a visa living in Australia. However, they are now working in overseas. For example, they are Australian citizen, they are Australian PR, but now they are working in Malaysia, they are working in Singapore. So they only got income from their local countries, from Malaysia or from Singapore. So can they apply? Yes, they can. And they even get a better loan proposal terms. So I will mention this in details afterwards. The other things is talking about age. I've been asked quite a lot to say, oh, I'm close, my age is closing to retirement age. Can I borrow? The answer is yes, because for those non-banking lenders, they can lend loans to people usually around 7 years old, or even some lenders can go up to 75 years old. So they still can apply the current loan proposal, but of course some terms might be varied. But you, even your age close to retirement age, you are still able to apply the loan with those Australian lenders. So you can see there they have very flexible requirements in terms of applicants to apply for the loans. And the other part I would actually introduce, talking about the lending purpose. If you apply a loan to those Australian lenders, you can for like a new house purchase. The new house purchase also including off the plan market, off the plan properties. And you also can apply for purchasing land and the construction. Apart from that, you also can apply for the refinance and cash out finance. Talking about the refinance and the cash out finance, I will give you more explanation in my second part of presentation. So basically say for those Australian lenders, they can lend any type of properties in Australia. When I'm talking about the new purchase, that also including apartment, townhouse, houses. And the construction means that's you buy a land and the construction after the land is settled. So all these type of the properties, they all can lend for the lendings. Yeah. When we're talking about the repayments, so they also provide a long-term loan. So usually the term they're providing is range between like 25 years up to 30 years. So it's, those Australian lenders can provide long-term loans. The payment can be principal and interest. Although they prefer principal and interest repayment, but of course they also accept interest-only repayment. Compare with principal interest and interest only, that might impact the amount that you needed to pay monthly. Obviously, say the interest only repayment, the monthly amount will be lower than the amount which you choose principal and interest. So here, the repayment, you can choose principal and interest, this payment method, and also you can choose interest-only repayment method. And this repayment usually is monthly repayment. And this monthly repayment is paid at rear, not paid in the front. So that also could be different with some other banks. I'm not sure if Malaysia or Singapore banks, they will pay rear or front, but for Australian lenders, they always pay monthly repayment at rear. I think interest rate could be the most frequent to ask the questions. Everybody very care about the interest rate. So on the current lending market for non-residents borrowers, so the interest rate, we're probably looking at 4.5% if you're borrowing 65% amount. And by the time your LVR getting a little bit increase, the interest rate will also increase a little bit. So that's why I put the price, the interest rate is 4.5% to 5.3%, depending on how much you would like to borrow. And also, before I mention about interest only, now these Australian lenders, they are also can provide interest only for up to 3 years. So in other words, you can choose 1 year interest rate, you can choose 2 year interest rate, and up to 3 years interest only. So the interest only term will be up to 3 years. If you choose interest only, the interest rate could have another additional 0.5% on the top. So that's the difference compared with. Let me make it maybe even clearer. So when I say the interest rate 4.5% to 5%, I more refer on the principal and the interest, this repayment. If you choose interest only, you probably needed to add another 0.5% on the top of this interest rate. Apart from those general terms for the loan proposal, these Australian lenders also provide very flexible and very useful function attached with your whole loan terms. First of all, I would like to emphasize is say, for most of those Australian lenders, they don't have lock-in term. In other words, they never put on say, oh, you have to with us for 2 years, or you have to with us with 3 years. You can pay off your loan at any time during the long term. I've got quite a lot of friends, a lot of clients. They always contact me during the long term. Some of them, they maybe 6 months after the loan starts. Yeah. So they told me, say, oh, can I just partially pay off some principal? I said, oh, of course you can. So in other words, say during the long term, you can partially pay off your loan, which means reduce your loan principal, and at any time, maybe even a couple of months after your loan commenced, or maybe 2 or 3 years after your loan started, and you can pay off your loan in full amount as well. So saying that even you early repaid your loan, and there are no any additional cost to charge you. So it's totally regular, normal to pay off your loan at any time. So that's give you the flexibility to manage your loan. So the other feature, I also very like this feature is say offset account. So most of Australian lenders, they can provide offset accounts. So using offset account can reduce your interest cost, because the balance sitting in your offset account can take off some interest payment from your loan amount. So this is also a very useful function associated with your loan. And the second one I want to mention is withdrawal facility. So some of Australian lenders, they also can provide a withdrawal facility, which means you can use that account as I shouldn't say as a normal transaction account, but give you a flexibility to use that account. So you can, if you've got some extra funding, So you can put it into the account, which means you are able to offset some interest cost. However, if you think, oh, recently I needed to use that extra funds, you still can very flexibly transfer out from the offset account. So you are free to control that additional funds. And these lenders allow you to withdraw those fundings. So they provide the withdrawal facilities. The other things, the number point 4, I would like to share with you, say, from my experience, some banks might be very strict on identifying your income source. But however, for those Australian lenders at this moment, they are very flexible to consider where your service funding comes from. So those income can combine with your regular salary, and also those income came from any rental income from your existing properties. Plus, if, for example, you have regular share dividends, that's from your investment. Those regular dividends also can be part of your income, and combine all these different types of incomes. They will calculate into the total amount of your income through different sources, and using this total amount to assess your service ability. So that's also can maximize your service ability when you're applying for the loan. So you probably can bear in this mind. Don't worry about, oh, your pay slip show the amount is not that too high. It's okay. You can combine with other your income sources. So if you pay more attention with this point, that probably can maximally can help you to get a loan very successfully, and got more chances to get a loan from those lenders. Then we're talking about the interest only and the PNI. PNI is the short term for the principal and the interest. Before, I already mentioned about the interest only and the principal and the interest. But when you're applying for the loan, you probably needed to consider which way is more suitable for your personal circumstances. So the difference compared with interest only and the principal interest is the monthly repayment amount can be different. For instance, if you're using the same loan amount, let's say 300,000 is your loan amount, but if you apply for interest only, your monthly repayment could be less than if you choose principal and interest. But so that's why you needed to consider about which way is more suitable. For instance, someone, they prefer, during the long term, they prefer using, trying to slowly reduce the principal. Then you probably can choose principal and interest, because during the long term, your principal can get in less and less. However, some people say, oh, this property I mainly used for investment purpose. I don't want to inject more. I don't want to pay extra money. So then maybe from this reason, you probably can choose interest only, because the monthly repayment amount can be less. So your rental income can get more extra, you know. So that's the way you usually need to think about which way whether interest only is more suitable for you or principal and interest suits you. So up to now, I give some brief introduction about the general loan terms and the loan conditions for those proposals currently provided by the Australian lenders. So next, I very like this part because I very like to would like to share some my thoughts and my experience about how you are able to use lending to help you help your investment being very successful. Because for those Australian lenders, they are able to provide a different type of loan for you. So if you are able to choose the right type of the loan, that will give you a lot of help through your whole property purchase. So for those loan types, I mainly would like to mention 3 types of the loans. So I will explain one by one. First, I will explain what's about refinance. Based on my experience, the major 2 reasons people would like to think about refinance. Reason 1 is trying to reduce the interest rate. For example, I've got a lot of clients. They borrow the money, let's say 3 or 4 years ago. Like I introduced at the beginning, 4 or 3 years ago, the interest rate from those lenders are very high, up to 7% interest rate. But now the interest rate only 4.5%. So a lot of clients come to me and say, hey, how am I able to reduce the interest rate? So refinance is the good way to reduce the interest rate. So here I'm using an example to explain how refinance can reduce your interest rate. For instance, your current loan amount is 350,000. Your previous interest rate, like I mentioned, it's almost 7%. Let's say 6.98%. So if using principal and interest, so the monthly repayment was 2,300 every month. That's quite a lot monthly repayment amount. So now you are able to apply to your loan again with the lender, but when during the loan application, the lender will assess you under the current loan rate, which is applied for 4.5%. You still need to go through those loan process, but more easier than the beginning loan process. After the loan being assessed, and you are able to pass on the serviceability assessment, then your whole loan will be transferred from the older loan proposal to the new loan proposal. So at that time, the new rate will be applied. So through this process, your loan interest rate will be dropped to 4.5%. Say if we still calculate based on the principal and the interest, you can see the monthly repayment will only be 1,700. So you can see there was a 600, almost 600 difference. So that can give you a lot of saving in terms of the monthly repayment. So you can review your loan. If your current loan interest rate is still high, you definitely can ask the lender for refinancing. So purely want to reduce the interest rate, that's one of the major reasons to go ahead with refinance. Another major reason to apply for refinance is looking for more funds for yourself. So looking for more funds for yourself. So I will leave this to explain more afterwards. So first of all, I explained one of the type of loan is refinance. Here, I want to explain some more about cash out finance, because cash out finance is another very useful loan type. So here I giving a case study. For instance, you are currently owning property A. The property A value is 500,000. However, for this property A, you don't have any loan against this property. So it's a clear title, no loan. Now you are going to think about purchase another new property. So the new property B, could be valued as 650,000. So during this scenario, you also can using lending to help you in purchasing. You can using property A as a security to apply a loan for cashing out some funding. At this stage, most of lenders can cash out up to 60% of the property value. So in this case study, I only using 50% of borrowing. So let's say the value is 500,000, and you apply a loan for 50% of the value, which is 250,000. In other words, you are able to generate 250,000 cash to support your another purchase. And at the same time, for your purchasing property B, you still can using property B as a security to apply a loan. So on property B, you can apply for a loan with, let's say, 60% LVR, which is 360,000. So you can combine these two loans together. So you can see from property A, you get funding for 250,000. From property B, you get property funding from about 360. So this adding together, it's almost your total value of the property B. Yeah. So which means, say, using this method, you probably no need to prepare additional cash to your new purchase, or very minimize the cash needs for your new purchase. So this is a very useful way to accumulate your portfolio. We have a lot of local clients. They already continually purchase one or two properties. They've been using this method very frequently. So that's a very useful way to increase your whole property package. But of course, you need to consider how much you are able to borrow. So this, and we given the name of this type of lending, it's called a cash out finance. So you got a real cash to support your new purchase. So this is the second type of the loan I would like to introduce. The third type of the loan, I call this as top-up finance. Remember, if we back to the refinance, so the reason 2 is seeking more fund. So here is the more explanation, I would like to how you are able to seeking more funds using your existing properties. So, for example, you got a one property. The original value is 450,000. You also got existing loan on this property one. Let's say you've got like 60% of the value, your loan amount equals 60% of the value, which is 270,000 loan, outstanding loan on property one. But however, through the years of your holding, the value has been increased. So let's assume the current value for your property one is 550,000. So you still can using the increased value to play around. So how we are able to play around the increased value? So you can apply a loan. The bank, the lender will do another variation on your property one. So after the variation, they give the result for the variation. Say, okay, current value is 550,000. So they are able to reassess the loan and giving you more funding based on the new value. So here, let's say 550, we still apply for 65%. So the loan amount goes to 357 and 500. So you can see you've got an additional loan amount, which is equal to 87,500 from the property one. So when you got this additional 87,000 funding, you are able to inject this funding to your property two purchasing. For instance, the property two is valued as 650. So when you also can using the property two as a security to apply loan. Let's say you apply a loan at 65% LVR. And on the top of that, you can use in the additional funding from property one, which is 87,500 to pay for your deposit, or using this funding to support your property two purchase. So through this process, you only needed to prepare those cash, which is just equivalent to around 25% of your new purchase. So which means through this process, you can minimize the cash you needed to inject into your new purchase. So through this turnaround, it's also a very useful method to minimize using your current cash. However, you still got a power to buy another property. So this top-up finance is also a very useful approach when you're using finance, when you're using lending to support your whole investment. So this is two different types of the lending that have been using very fluently through a lot of clients, and some investors, they very regularly using different way, trying to using finance to support their purchase. Yeah, I think that's all for me to given the information for all of you.
All right, thank you, Fiona. Thank you so much.
You're welcome.
Before we get to the next segment of the question, we have tons of questions over here, but I think our time, nice things, time flies so fast. But before we get to question and answer sessions, right, I just want to address a couple of things. So if you have stayed with us throughout the whole webinar, I mentioned about local banks, they can only finance apartment units, but over here we actually offer the options that for house and land packages, you can take loans from the Australian lenders. All right, and I think that was a quick question. Someone actually messaged me whether PR can they take loans. Before we answer the question, I want to address that if you are Australian PR, in fact, you cannot take loans from Singapore. I think that's the same for Malaysia, isn't it, Jeff?
Yes, but depends on their type, which title, under which. Yeah. So,
okay. Now, where and then sorry, Fiona, you have something to add on?
I would like to mention about Australian PR. So all the loan features in the terms I mentioned in my presentation today is for non-residents, which means not Australian PR. However, for Australian PR, they even got a better loan terms. They can get even lower interest rate and even less loan costs. So so definitely all those Australian lenders also can lend for Australian PR with overseas incomes.
All right.
Okay. And to address, I think a lot of questions I have actually also missed out mentioning. For local banks, for Singapore side, my understanding is the local interest rates, all right, from the various banks range between about 2.85% to 3.25% for Singapore Singapore dollars denominations. And as for the Australian dollars denomination, it's a higher, it's a range between like 3.5% to 4%. So that is actually quite close to even what Fiona is actually presented on the interest rate on Australian lending. I understand it's about from 4.5%.
Yes, that's right.
And with that, a very quick this commercial, this advertising, HSBC are actually having a promo at 2.45% for Australian dollars. All right, but understand that HSBC has their eligibility criteria, like the minimum income and as well as probably the loan size. All right, so what we urge here is investors do get in contact with us individually, because we do know that every individual cases is different. Some banks consider on case-to-case basis. Fiona, your Australian lenders also do consider on a individual basis, isn't it?
Yes, correct. Yeah.
All right. So, Jeff, we have any the chat Q&A session?
Yeah, I think we have
questions that address
coming in, so we can address this now. So, okay, first one I think from Mr. Wong. So he is actually asking what is the current lending rate for property financing for foreign investor. Okay. So Fiona, I think you can answer this.
So current lending rate, yeah. So current lending rate is, as I mentioned, say it's roughly around 4.5% if you borrowing 65%. Slightly higher if you want to borrow more. Yeah, so this is for foreign investors, for foreigners. The rate is for foreign. This rate is for foreigners. Yeah.
All right, it will be around 4.5%.
Yes. Yes.
Yeah. I think as Henry mentioned, for Singapore Bank also it's slightly lower, and for Malaysia Bank, current lending rate for Malaysia Bank is also between 4.5 to 5.1%.
Oh, so that's very close, very similar. Yeah.
Okay, so then we can move on to another. Next question is what is the percentage offered by Singapore Bank now for Australian property financing? Yeah, and maybe Henry, you can answer this.
Okay, I was looking at this question. I thought the question is on the interest rate, but if you're talking about in terms of loan size, my understanding is generally for local banks in Singapore is offering up to about 65%. But then again, I want to repeat.
I think I understand the question you're asking about interest offered by Singapore Bank, yeah.
Which I already mentioned. So on generally, for Singapore denominations about 3% and about 4% for Australian denominations. But since I already mentioned about the loan size, it really gave us a guideline of up to like about 65%. But again, the point to note is locally we have this TDSR that is in place for us locals. So again, we have to take each and every individuals, and then to introduce to the bankers, to speak to the bankers, or to speak to the independent mortgage broker like Fiona to assess their current situation.
Yeah, and also most importantly, I would like to add it's actually a loan to valuation. So it's based on valuation always. Okay, so maybe we'll take the next one. So is loan available to non-PR? Yes, I think this is a very straightforward question. Yes, for even Australian bank, Australian lender. Yeah.
Yes.
And then
I think I saw this Mr. Lee's question is pretty interesting. I mean, let's address that. Mr. Lee was asking whether do the banks do refinancing for an existing loan with a Singapore bank. Now, I presume his question is all directing to Australians. Because again, maybe allow me to start. Singapore banks, my understanding is there is a lock-in period. So let's presume that it's already after a lock-in period, you can do a refinancing. Am I right, Fiona?
Yeah.
Okay.
Yeah.
So Mr. Lee also asked, does banks provide loans for self-employed personnel? So again, what Fiona have actually presented, they do take in the self-employed income, make sure that your statements are all in order.
Yes.
Okay, and
but self-employed is very very common type of applicants for loan lending. So it's not unusual. It's very common. So definitely we can try without any hesitation.
I think that's where a lot of business owners are doing investings.
Yeah, that's right.
Okay, Jeff, we have do we have any more?
I think we will take two more questions, then we'll wrap up for today. So I think one more is 65% LVR the maximum Australian lender offer, Fiona?
No, actually, before, like 3 or 5 years ago, those Australian lenders are very strict on LVR, so they try to control the risk. But now, especially for from later last year till now, so they've been very flexible in terms of the LVR. So currently, those Australian lenders, they are even able to offer up to 80% of LVR. But 80% LVR, saying that that could be varied by the location of the property and could be varied by your serviceability. So it's and it depends. But they have policy to lend up to 80%. But after that, based on your personal circumstances and do the assessment. Yeah.
Okay, yeah. Thanks, Fiona. So I think we will take one last question. So for foreign lenders, so intending to purchase an Australian property, so what is the minimum annual salary applicable before Australian lender will consider an application? What's the minimum requirement? Yeah.
So actually, we don't have kind of like a minimum annual salary, this kind of requirement. You can't say, oh, I only earn 50,000 yearly. Then you can't apply the loan rather than other people earning more. We don't have this kind of requirement. But saying that, if you have, let's say you have 50,000 annual income, you still can apply loan, but maybe the approved loan amount could be less. You know what I mean? So you still can apply the loan, but approve the loan based on your serviceability. Could be the approved loan could be less. If you have like a higher income annually, you probably can get a more loan approval amount. So that's a different concept. Doesn't matter how much you earn every year, you still can apply the loan, but based on the approved loan amount. And also the other point I would like to emphasize is say, apart from the regular income, please don't forget your other income sources, like a rental and your investment income, you know, so that's all can buy as a total annual income.
Even local rental income can put take into consideration, isn't it, Fiona?
Yes, yes. For instance, you've got a rental income from your properties in Malaysia, from your property in Singapore. It's still taken into account, but of course they might have a some discount, you know, rather than Australian property rental. So, but it's still put into together.
Yeah. Okay. Yeah. Thank you so much, Fiona. So I think Henry, we were about to wrap up for today's session. So
okay.
I think there are still some questions. So I think we will address it offline, so one-to-one.
Sure.
Yeah. So as you can see now, we have all three of us contact showing here. So actually, do reach out to us so that then we can answer your question personally based on specified requirement on your cases.
Okay, so before I go, I just want to make one last point. So I also do understand that a lot of investors are very, you know, mentioning about this taking loans and paying so much interest, you know, into a property investment. But to tie back to what we have actually our previous webinars, right, the interest taken in both local banks as well as even in Australian lenders can be used for the tax deductions. So something to lower the tax, and of course to all the experienced investors, we all know that to leverage on borrowing is the best way for investment, for any investment. Yep. All right. So with that, I would like to thank Fiona to have you with us. All right, and thank you.
It's my pleasure to give you this opportunity.
Sure. So and then once again, you know, we like to apologize. We can't answer all the questions, but we'll definitely take them offline. The consultants will actually get in contact with you very soon. If you have any more questions or would like to speak to us individually due to you know, private and confidential too, you know, contact us. Our contact numbers are there. All right. So with that, I would like to say bye to all, and thank you so much.
Okay.
Thank you for joining us today.
Bye, everyone. Take care.
Thank you.